So that's a pretty steep surrender charge if you think about it. But hey, John Stevenson, the Guaranteed Retirement Guy. And I wanted to talk with you today about a client of mine who replaced her policy but suffered a huge surrender charge, but at the same time, she got a huge benefit. So when is it appropriate to actually replace your annuity, even if you have a surrender charge, but at the same time, have a higher benefit? Okay. Usually insurance carriers do not want us to touch any type of policy for a replacement unless it really benefits you, okay? It really has to be on a high level. If it's really just a small benefit, they usually don't want us to touch it because, well, you've got usually surrender charges within the first 5, 7, 10 years, depending on the contract. You don't want to have some sort of loss just to have some agent replace it, right, for an annuity that they are recommending that hopefully is better, and of course they're going to make a commission. Okay, so I had a lady, she had a policy, it was worth $679,000. The problem is she only had it for 2 years. But the other issue is the income that she was going to get from this policy was not very high. It was around $3,100 a month, which, from that high of an amount, she's 65 years old, she wants to take income at age 70. It was just not a great option for her. This annuity was more for growth. It wasn't a bad annuity, it's just the agent that sold it to her did not ask all of the right questions, but because he didn't ask all the right questions, she had the wrong annuity, okay? Obviously, if she kept it, she wouldn't suffer the surrender charges, which were pretty substantial. If she actually surrendered the policy, the $679,000 accumulation value, she would actually only get $607,000. So that's a pretty steep surrender charge if you think about it. But we found her a company that would actually take that surrender charge, and at the same time, since income was her most important goal, then the income actually more than doubled. She's actually going to get around, I want to say $71,000, $72,000 a year in income. So pretty close to $6,000 a month that she's going to get for the rest of her life for the same exact premium, except it's not going to be the $679,000. She's going to get it from $607,000. And it's the same waiting period. So she puts in $607,000 into this, and she waits the same 5 years. She's going to get almost $6,000 a month. I think it was like $59, $58, something like that per month that she's going to get. That's huge. Okay. So when you're looking at replacing a policy, you got to compare that and say, all right, am I getting more for these charges? And sometimes you are, even with some fixed annuities like MIGAs. If you're pretty close to the end of the maturity date and the surrender charge is maybe a few grand, but the amount of interest that you're going to earn from the new one is a lot higher to overcome that cost, then sometimes it would make sense to do a replacement. Talk to a professional, okay, like myself. I look at annuities all day long, and I do have people that approach me with current annuity contracts and they want to replace it. And there are times where I say, no, you should keep it where it is. Maybe the surrender charges are too high, or maybe the benefit, maybe you have an income benefit that is high enough where it doesn't make sense moving it into another annuity contract that has a similar income benefit, and maybe it won't, maybe it'll only give you a couple $100 more per month or even year. That just doesn't make any sense to replace something like that. So don't let an annuity agent, a commission-minded annuity agent, try to sucker you into buying an annuity or replacing your current annuity just so they can make a commission just to give you a little bit more of a benefit, okay? Maybe you're surrendering a huge amount. They don't talk to you about what if you need to surrender this in 3 or 4 years because of some catastrophic event in your life where you want to access that money. Now you're accessing even less, okay? So there's just a lot of things to think about. You need to work with someone who has your best interest in mind. So if you want to chat about your annuity, maybe you're thinking about replacing your annuity, but you're not sure, you're being pitched an annuity replacement, you're thinking, I don't know, it looks like I'm gonna get a little bit more income, but what about these surrender charges? What is my minimum guaranteed value? That can be very different than what your surrender charge is, because you got surrender charges, you got MVA charges, the market value adjustment, and those combined could be much, much higher than what your minimum guaranteed value is. And the minimum guaranteed value is really what counts. Because, and I just want to tell you, when we were talking to her old company, they were saying, oh yeah,
your surrender charges plus your MVA charges is going to be $155,000.
And of course, that scares people. And it's a preservation tactic that these insurance companies use to keep the money there. And of course, what they didn't talk to her about was, and it's in plain print on her statement that says her minimum guaranteed surrender value is $607,000. And ultimately, of course, that is what she got. So they do make you sign a form that says you could lose up to this amount, and they include all the charges, the surrender, the MVA. They don't even talk about the minimum amount that you're going to get, regardless of the preservation tactics that they're using, the fear tactics. So keep that in mind. I do specialize in replacing the policies when it is right for the client, but if it is not right for you, I'm going to tell you not to do it. I'm going to tell you to keep your money where it is. Okay, I don't need the commission that bad. Okay, I need you to have a good experience and to be able to keep the contracts that are going to be the best for you, not something that's going to benefit me. Because in the long run, it's not going to be good for my business, because you're going to find out, oh wow, he just replaced it for his own benefit. That's not what you want. Okay, you want an agent that's working in your best interest. Hope that helps. Hope you enjoyed the video. And again, if you want to book a call, there is a link below this video, and we can talk about all of your annuity questions, what you're looking for, if you're looking for guaranteed income, if you just want growth, if you just want market protection, or all of it. We can talk about that. So again, thanks for watching, and we'll see you next time.
Hello there. Any questions, comments, concerns, criticisms? Please comment below. I'd love to hear it all, and I'd love to answer your questions. See you soon.